Welcome back, everybody. We're here to give a quick update. And of course, we've got Warren Hogan, the Chief Economic Advisor for Judo Bank, back again to give us an update on the latest sort of goings on from the RBA and to give us some interesting insights into what businesses can be looking forward to over the next sort of 3 months, next quarter, and into the rest of this calendar year. Warren, welcome back.
Thanks, Simon. Good to be with you again. It's interesting times.
It is indeed. You know, Warren, you caused a stir a couple of weeks ago by changing your forecast for interest rates, obviously indicating potentially a few more hikes. Obviously, everyone was thinking the next move was down, and your change of view kind of got a little bit of attention in the media. So, given the strong words from the RBA governor this week, it looks like you are on the right track. But, what is your new view? Maybe you can just explain it for our viewers. What's your view around interest rates and why did you make this change?
Yeah, no, it did cause quite a stir because, no one really wants to see rates go up, and I don't either. I've got a mortgage, and it is getting riskier and riskier in terms of what it means for our economy. But what we saw coming out of the summer holidays was a genuine shift in sentiment, particularly in our business community, and we're picking that up in the Judo Bank PMI, where we're seeing a big lift in activity in that survey. SMEs are leading the recovery in 2024. We just released the April numbers, which showed SME activity at the highest level in 2 years. But there's more indicators that, start to really worry me. The employment numbers were strong. And of course, probably what you might call the nail in the coffin of the existing view was the higher than expected CPI. So what we're seeing is essentially an economy that's doing well, but you don't want it to be doing well. You need it to be soft. If we want to get rid of this inflation without a recession, which is the whole point of this narrow path, it has to be soft for an extended period. So the strength in employment is the thing I think that's most worrying for me. And now we've seen the RBA come out, most worrying for them, because although retail sales have been weak at the start of this year, eventually people will start spending, particularly if rates aren't going up and they've adjusted to this new higher level of rates, and also with the tax cuts coming. So look, it's still a forecast. It's no done deal. And the whole point was I was sitting there about a month ago looking at my forecast, and I do this through various scenarios. I mean, no one knows the future, so we're just sort of trying to look at what's most likely. And I had a choice with my central case. I either revised up growth and inflation or I put in a couple more rate hikes. And I think it's the couple more rate hikes are to keep us on the narrow path, to keep us on this trajectory where, yes, the economy's soft, but we get inflation down, get this cost of living crisis behind us, and then we pick up again. Because the alternative, and history shows this in this country, all around the world, that if you let inflation get stuck in this economy, the next time the economy really picks up, inflation will really pick up, and the level that rates have to get to will be disastrous. Now, my estimate is if we go down that route, which we saw in the late 80s, the equivalent to the 17.5% cash rate from the late 80s, which is always folklore in this country, is probably something around 6 to 7. And if we go there, we're going to wreck the economy. So it's all about mitigating that risk, all about keeping us on the even path. And unlike some of the descriptions of my view in the media and by politicians, this scorched earth kind of view of the economy, it's not that at all. It's actually about keeping things on an even keel.
Yeah, look, that's really interesting. And I'm glad you mentioned the sort of previous rates of the 90s. I mean, I saw an article this morning even touching on saying, be careful what you ask for, right, in terms of interest rate hikes and, or what you're sort of pushing out there. But I've always sort of been curious about this sort of relationship between sentiment and what actually ends up happening. And, I saw another pundit that today sort of suggesting that even the threat of interest rate hikes, could that be enough to make people change behaviour?
Yeah,
versus, and I've certainly seen in the past where, the RBA has jumped to 50 basis points to kind of really sledgehammer home the message. And so, do you see, how do you see this sort of all playing out, I guess, over the next sort of 3 to 6 months?
Well, I'm being sort of pillared in the Australian media for the guy who wants to hike rates and put the economy into recession, which, as I just explained, is not the case at all. And if anything, I'm actually doing the community a service by me coming out and shifting the conversation, and it did. That actually reduces the chance you get a rate hike, because The conversation up until a few weeks ago was, when's the next cut? Is it going to be in September, November? The whole conversation was a matter of when, not if. And of course, that's going to feed into people bidding up more at auctions or someone being a bit more willing to spend, and just the threat. And on that point about expectations, I mean, I spent my career in financial markets, or the first 20 years of it, and expectations are critical there, of course, but you're seeing it in the economy more and more every day. So one of the things I really noticed was we got back from our summer holidays, come February, the mood in the business community in this country lifted. I'm not talking about big business, I'm talking about the rest of us. And
Yep.
I think that was driven by the fact that they thought rate hikes were behind us. We'd seen the last rate hike and the economy hadn't tanked. And that lift in sentiment, I think, has really driven this improvement in business conditions this year.
Yeah, interesting. Well, look, and now that you mention that, I mean, obviously you follow business conditions pretty closely, and Judo Bank's PMI surveys and things like that, as well as obviously talking directly to business. So, how is business faring in general in 2024? I mean, are there any sort of other systemic issues that I think business owners need to be aware of?
Look, there's definitely been an improvement in activity, and you can see that in the PMIs that Judo Bank sponsors. This is Standard & Poor's, who do this all around the world, and we sponsor the Aussie series. The SME sector, as I said, is leading the charge on going from soft activity levels to solid activity levels. NAB survey, which is very well regarded, is showing pretty good conditions. Confidence in the business community is still what I'd call neutral. So you look at consumer confidence, it's in the pits. It's at recession levels, even though our economy is not, and our unemployment rate's at 50-year lows. Business confidence, though, is just neutral. Now, I actually think that's a strong outcome because of all of these uncertainties. And of course, the operating environment's so tough. Sure, we may be past the worst of the consumer adjustment, but cost pressures are still lingering. Labour scarcity and labour costs, government regulation. And look, I think the business community is a bit worried about what this government is sort of where they're moving with, not just the IR stuff, which has been happening for the last 18 months, but I think this concept of future made in Australia sounds great, and I think there's some really good stuff in there, but I think a lot of people think, oh no, is this the government just getting its fingers in the pie in the economy and trying to sort of tell us all what to do? So look, business still has a lot of challenges and concerns, but what's happening on the ground still seems to be that most sectors are doing okay.
Do you have a view? I know we've spoken in the past about sort of defaults and liquidations and, stuff like that. I mean, are you seeing anything sort of in the data there that's sort of changed your view on that?
No, look, we have the ASIC first-time insolvencies continuing to rise. I think the February or March data is the last numbers. They're running at about a 11,000, 12,000 rate, which is as high as it's been in sort of a decade, and up near sort of all-time annual highs. But we've got to put these numbers in perspective. We're talking about 12,000 first-time insolvencies. There's 2.6 million businesses in Australia. Yeah. We're talking about fractions of a percent. It's really quite a small amount. And look, the discussion we had before was, if I recall, that we haven't had many insolvencies compared to the historical trend for the last decade. There's a lot of, I think, weak companies out there that are hanging on either because interest rates have been low, because of pandemic stimulus, and that world is changing now. It's the ATO leading the charge here. It's not the banks defaulting. It's the ATO chasing SMEs, unfortunately. And look, there's another big strategic issue facing weak businesses, and that is this labour scarcity and labour cost upward pressure is not going away anytime soon. And if you're a weak business, you're going to struggle to pay more for staff. And of course, eventually you'll struggle to actually retain and attract staff. So I think there is still a pocket of real vulnerability to default in our business sector. And I think those ASIC numbers will still go to record highs in the next 18 months. But we should be careful not to lose perspective about what that is. That's businesses that probably have lived longer than they should have, outlived their natural life cycle. And of course, it's a small fraction. And I think part of the labour shortage story is actually labour getting trapped in crappy businesses, basically. So businesses that fail release labour into the economy. Now, that's not a nice idea from a human perspective, but there are jobs out there. And
Yep.
it's all about retraining people and getting them into the roles that are out there that people need to be filled.
Yeah, look, that makes a lot of sense. And, you know, we're actually seeing that sort of flow down into our sort of neck of the woods. You know, in the market, there's such a challenge for business owners trying to establish some form of succession plan, you know, finding good talent. How do we bring people up the curve? How do we, you know, how do we manage this kind of wave of boomers looking to somehow kind of step back from a lot of the day-to-day operations? And it's, you know, those issues just keep flowing through to businesses of all sizes. So it's quite interesting, and I certainly see a lot more of that happening as well. Warren, you know, thank you so much for your time today. You have highlighted a number of key issues. Are there any sort of other one or two parting sort of thoughts or tips or things that you think business owners just need to be mindful of over the next 12 months?
Yeah, look, I think there's light at the end of the tunnel. And we certainly, I think, are going to continue to see an improvement in the economy over the next 18 months. But there is this still very challenging environment. The big question mark over the next 12 months is what happens to the consumer. And if they do need to raise rates one or two more times, what does that mean? I think it's going to be a tricky environment up until the next election, which will be sort of March, May next year. But I think sort of 25, 26 onwards, there's good reasons to think that it's onwards and upwards for this economy. And hopefully by then, these cost pressures will have really moderated. And of course, inflation will be back to where we want it.
Yeah, brilliant. Warren, one last final question. Obviously, you just mentioned the Australian election, and of course, we do have a US election coming up as well. You know, do you see that scenario having much of a knock-on effect for business sentiment in general, and of course, the Australian economy?
Well, the history shows that businesses tend to get a little bit cautious in the run-up to one of our general elections, and I think it's going to be no different this time. The government's about to release and is sort of releasing its grand plan ahead of that election. This is the Future Made in Australia, the new industry policy. Like I said, probably making people a little bit nervous. But I think the next election's up for grabs in this country. I know historically you rarely have one-term governments. And look, it might not be that the coalition gets in. It might be a minority government for the ALP. Whatever it is, it's going to be very contestable. There's a lot of new and interesting ideas being put forward by the ALP. And of course, we know that the coalition will probably go back to its knitting, which is a more market-orientated economy. So I do think that there'll be that nervousness, and there's a lot up for grabs. Part of the reason I think the operating environment will still be a little bit tricky. As for the US, I mean, look, the insurance companies are putting odds quite high that one of these two candidates will not be alive by the time of the election, and Trump could be in jail. So, look, I have no idea what's going to happen in the US, and that's going to just make people nervous as well. So, as I said, still got a pretty tricky operating environment, but it's a short-term phenomenon. It should not stop people thinking about, you know, the 3 and 5 year view and planning for that.
Yeah, sounds great. Warren, great advice as usual. Thanks so much for sharing your insights with our people, our audience, and look forward to catching up again soon.
Fantastic. Thanks, Simon. Thanks for having me on.